Welcome to my channel. Today, what we're going to look into is the secrets of Bollinger Bands. I want you to be really attentive today. Yeah, we many of us as traders we know about the Bollinger Bands, but we really don't know much about the Bollinger Bands. We don't really know its secrets, the secrets of the secret on how to use it. Today we are going to share more light on how to use it. Stay with me. So the basic things about the Bollinger Bands are the bands. We have the upper band, we have the middle band, and we have the lower band. The upper band and the lower bands, they are like standard deviations. Yeah, they're just deviations. While the middle line, that middle band is a moving average. Usually you can set it by default. It's usually on that 20 period moving average. So the principles behind Bollinger Band is this: if price moves to the upper band, if price moves to the upper band, then automatically the market is supposed to sell. Like, this is it. The upper band is like resistance and the lower band is like support. Yeah. While the middle band is just like not moving average. Yeah. So by default, if the market reach the upper band, if the market touches the upper band, it's supposed to sell by default, but it doesn't work like that all the time. One thing about the Bullish band is that it does not work alone. You have to combine it with other trading techniques before you can use it successfully. So now these are some of the things you need to combine it with. You have to have basic knowledge of chart pattern. Like this pattern that is here on our charts now, this particular one was saying here, we have this double top, this M, classic M pattern that has formed like letter M, or you can call it the double top. So it has formed already currently now. So, and you see that the market has touched this upper part of this Bollinger band, and it has already started coming down. Yes, let me enlarge it for us to see more. It has already started coming down, and one rule about it is that before you can enter a trade, you must make sure that the market has closed below the moving average, that is the middle band. Make sure the market has moved below it, or so that double top. If you market must move below it, then you can take an order, and time has already gone. But I've taken an order by now, but I can still do it. It's not the perfect time for trading though, but now I'm going to take an order. It's a new account, so I'm taking an order now. It's a sell order. Lead market. Okay, I've placed the order. So we'll watch it even as we are in this topic. So the next thing you need to pay attention to is um, these chart patterns are usually formed during Bollinger Band. Bollinger Band really bring them out more for you to see. You see here, this place is double top is already formed. This is a very good sell opportunity. While another thing you need to pay much attention to is the squeeze of the Bollinger Band. When the market contracts, when the upper band and the lower band, when they draw near to it, when they squeeze together, you need to pay attention to it. When they squeeze like that, it means that the market has been going through consolidation for some time. Yeah, like the, the market is not volatile, so it has been having slow movement. So that's what this squeezing means. This squeezing means that the market has been consolidating for some time. So what you need to watch out for during this squeezing is opportunities. So if the market touches after the squeezing or during the squeezing, the market comes to the lower band, you have to observe for buy opportunities. You don't just enter a buy order because it touched the lower band. No, you have to look. Is there a double this thing that is coming now? Is it forming a double bottom? You have to look at it and verify before you can enter a buy order. Like this particular place here within this market area here now. Let's see if it has a double bottom. Yes. So this is it. Let's use our trend line to check if it's truly a double bottom that it formed here. You see, there's support here. There's this apart from this Bollinger support, there's another support here because market has come here already before. Yes. So you can take an order here for a buy. You take an order here for a buy. Likewise, in some other positions, let's scroll down. Like somewhere here like this. You see around this area here, yeah, you see between these two double top. Let's rule it. Yeah, you see that this around here like this is double top. You can easily spot it while it's still forming and take a sell, and you close your trade when it touches the lower one. This will help you to so when trading during trading if you're using the Bollinger Band, you have to watch out for these key factors. You have to watch out for double tops, double bottom. You have to install some other indicators like the RSI. Yes, you can install the RSI sometimes to trace overbought and oversold region. So when overbought in the RSI, let's put on the RSI and see ourselves latest trend index. Okay, now let's look at it and see when it corresponds. My lines are not showing well. So let's see regions whereby this thing coincide with overbought and oversold. Now this trade here, this actually matched with oversold, that is overbought region, and this one thing you need to know about the Bollinger Bands is this: the upper band and the lower band, they tell more about the volatility of the market. It tells you more about how the market has been performing in the past hours. Yeah, it tells you more about the market in the past hours, yeah, or days according to your time frame. Yeah, so you see, if the market is very volatile, you that is the market is moving very fast, you see that they will separate from each other, you give each other this wide difference, like just as you can see here. Yeah, just as you can see here. So, and one thing about this squeezing and opening of Bollinger Bands, if after the squeezing the market breaks and the candlestick now closes above the upper band, just as you can see here, yes, it closes above it. This marks a break of market structure. This is like a break of market structure. So the best thing to do for this particular time is to trade in that direction. To trade in that direction. Sometimes, even if it's in oversold and you see something like this, even if it's in oversold and you see something like this, that the market closed outside above the upper band or the lower band respectively, just continue and trade in that direction. That is a break of market structure. It means that the market is very volatile. It's very, very volatile. So that is it for you. And you should know when to come out of the trade. That's when you have to learn how to use other tools like the RSI. You use other tools like the RSI divergence. You can use it to tell when to leave the market. But once you see something like this, it's a go market. It comes almost every time. Like even here, this is squeezing. You can see this squeezing here. Then you can see the activity. Look at it here. Started here. This one closed above the upper band. Then the market started that rally for so long. It started to rally in that direction. Yes, that's one beautiful thing about the Bollinger Band. If you really know how to use it, I bet you will enjoy trading with it. Just know how to use it. Combine it with chart patterns. I recommend chart patterns a lot, even more than indicators. Just combine it with chart patterns. It will tell you when to exit a trade, when to enter a trade. It's just like confirmation for your chart pattern. Sometimes without the Bollinger Band, you could open the chart and be confused and be lost in it. But when you add this Bollinger Band, it will open your eyes. Then you begin to see entry and exit positions, and you will enjoy your trading. Well, that's the size of our topic for today. If you found this content helpful, please don't forget to like, subscribe. Thank you very much.